Hello and welcome. Today we are going to be talking about how to be an attractive cannabis M&A target. And I have a number of people on the panel today that are experts in this area. And before I introduce the panelists, I'd like to, kind of tee this up a little bit about what's going on in the cannabis market with regards to M&A. And, M&A has always been a big issue in the cannabis industry for a number of years. It's been many companies that have been bought and sold and merged with others, and it's really changing quite dramatically. A lot of this activity was taking place on the West Coast for a number of years, and now that's migrating to the East Coast as more states on the East Coast become adult use legal. And in fact, this industry is growing so rapidly. I just read the other day that Arizona collected more cannabis tax than alcohol and tobacco combined. And that's a huge statistic, I think, that shows how big this market is. And then also today, I just read that cannabis is now the 5th most profitable crop in the US, behind corn, soybeans, hay, and wheat, but it's outpacing cotton, rice, and peanuts. So all these, commodities that you see out there, it's just amazing to see how cannabis in a short period of time has really outgrown some of these, legacy agricultural crops. So, what's happened in the past, in California several years ago, the M&A market was very dramatic, in that, companies that just had a license and a business plan would get these huge valuations, and they were bought and sold, quite rapidly. But things have changed now. The market has matured quite a bit. Certainly through COVID, cannabis companies were declared as essential businesses, and many of the cannabis companies have thrived during this COVID period. That others did not. And unfortunately, what I end up doing is getting calls from clients saying, hey, I got this LOI. Now I'm ready to sell my company. Let's just go forward. And it's like, there's just so much that needs to be done before you get to that point. And that's what our panels are going to be talking today about, is how to avoid the pitfalls and problems, once you're ready to sell or merge your company with another. So let me go ahead and begin, and let's introduce our panel today. Ladies first, I'm going to go with Parnia. Please tell us about yourself and your background.
Thank you, Mike. Hello, everyone. My name is Parnia Pantku. I'm a director in our business outsourcing services at Armanino, and I lead our real estate and cannabis practice. Previous to coming to Armanino, I was performing as interim controller and CFO in Silicon Valley for 15 plus years. So that's me in a nutshell.
All right, David, you're next.
Hi there, everybody. Thanks so much for including me. I'm David Feldman. I'm CEO and co-founder of Skip Intro Advisors. We're a cannabis and psychedelics focused strategic and finance and M&A advisory firm. We also do some work on the regulatory side and branding. And we also have an affiliated law firm called Feldman Legal Advisors, a boutique firm advising companies on venture capital, M&A, going public, regulatory side, psychedelics, employment law, and so on. Looking forward to the panel.
And last but not least, Victor, who on his photo here is in a beautiful tux, and he's also on our panel today. Victor?
Hi, thank you for having me. I'm Victor Guadagnino. I'm the former co-founder and chief business development officer of Keystone Canna Remedies, or Guadco LLC. We were the first medical marijuana dispensary in Pennsylvania, and we were recently acquired. Actually, our closing date was almost a year ago to the date today. So it's very fresh. It happened at a rapid pace, and I'm here to give you insight into that process, who we were as a team, and how we navigated that transition.
And we also have Dave Trailer that's going to speak today. Dave?
Yeah, why don't I just, I'm not at the airport, I don't want to disturb the flow, so I can jump on when I get in a quiet place. Okay.
Dave, you're going to introduce yourself.
Well, yeah, so David Trailer, Senior Managing Director of Golden Eagle Partners. We're one of the first, if not the first investment bank to be in cannabis, started in 2013. And also former Chief Business Officer at Cerna, one of the first public companies in cannabis. And glad to be here today. Thanks for joining.
Right. Well, Dave, actually, I'm going to start with you. You know, what are some of the M&A considerations that make a cannabis transaction different from other sectors? Dave, you're on mute.
Mike, I think he said that he needs a few minutes. Maybe perhaps we could move to the
Oh, all right.
on the panel.
So I'm sorry, I didn't catch that. David, let me go to you. What are like the 3 or 4 tougher legal issues surrounding the cannabis company, and you know what makes it so different, you know, from other acquisitions?
Well, in some ways, it's similar to other heavily regulated industries like food and drug or communications or healthcare. And so you have to deal with regulatory considerations, but you can layer on top of that the fact that it's heavily regulated, but also federally illegal. And so you need to address both of those sets of issues. And with respect to state regulation, which is what we usually focus more on, if you're doing an M&A deal, the question is, how does the state view transfers of ownership of licenses, assuming you're selling a company that is a licensed company rather than an ancillary business? And if it is, as we say, a plant-touching business, making sure that you comply with state law. And every state is completely different. There are states where it's clear that everything you do in terms of kind of a change of control requires the state to fully approve. And there are other states where there are sort of legal, legitimate loopholes where, depending on how you structure the deal, you may not require state approval. So you really need strong guidance on that. Second issue is what we call enforceability. When you sign a contract, you know, you can't sign a contract to say, we agree that together we're going to go rob a bank, right? That is not, as we say, enforceable. You can't go to court and say, he promised to rob the bank with me and he didn't do it. So when you're talking about something that's still a federal crime, if you're signing an agreement in connection with that industry, can you go to court and enforce it? And so there are provisions and sort of magic language that we tend to put in these contracts to make it harder for somebody to challenge it on that basis. The third area is what we call reps and warranties. And again, it often gets into these legal issues. When a company is selling the business, one of the things you do is go through a list of what we call representations and warranties, which are basically saying, you know, what is the state of affairs with this company? What have you done in the past? What compliance and so on? And one of the things we normally say is we've complied with all laws. So you often have to say, well, except for it's still federally illegal. Another key area is non-compete. We often have to deal with, you know, how we're going to restrict the sellers from acting on behalf of future competitors. And that can be an issue that gets complicated here. And the last one is due diligence, which I know we're going to be talking about more later, and making sure, most importantly, that you do due diligence, where there have been a number of deals that we've watched where, especially in this industry, everything moves in hyperspeed, and sometimes these acquisitions get completed with not enough due diligence or almost none at all. And so that's a very important thing to really focus on.
They're all really great points, David. And Victor, I'm going to go to you next. You know, I think you've got a really unique perspective on these M&A transactions. And, you know, one of the things that, you know, sellers are always just looking to sell their company, but they rarely think about, you know, what's the seller's the buyer's perspective, and what is their end game, and how can, companies that are looking to be acquired get into the mindset of the buyer?
Yeah, so that's one thing we learned kind of early on in the process. So we had a unique circumstance. We were one of the last licenses available for acquisition in Pennsylvania. Pennsylvania really became a microcosm for the country at large. It has major players in it, it has small operators in it. It's largely consolidated now, and we were towards the end of that. And that was a large kind of impetus of why we looked to be acquired, was because of large blockchain economics and kind of de-risking our investors with the strategy. We did end up actually selling for one of the highest evaluations for a 3-store footprint in Northeast PA. And I think it was maybe 6 months from the start of the process to close, which is very unheard of. So I got to see it kind of in real time and very fast. So what we learned is, in terms of insight into executive leadership, are they even available to you? Right? So will they make themselves available to you? At what type of footprint do you have? You have 1 store, 2 stores? Are you a larger cultivator? Even if it doesn't matter what size you are, in my opinion, the leadership team, the CEO, should be making themselves available to you for either an interview or for due diligence purposes, right? And this was kind of interesting during COVID. I know I'm younger, but I'm much of a fan of seeing you in person, sitting across the table from you, shaking your hand, being able to read your body language. And a lot of this had to be done through Zoom, right? So we had to get good at asking questions and you're towing a line, but like a publicly traded company, you can't really identify what targets they're going to next. So you do have to ask some kind of crafty questions. And a few that gave us good insight was, how do you transition? Do you have a team for transition? Do you have shared services? And then I think the best thing that you can do is, who are their competitors? And locally, not just like statewide, but even regionally inside the state, where's their footprint compared to some of the other top 10 MSOs or equally kind of sized companies? I think that's a great way to look at, where they're going. And then exit strategy, what I mean by that is, if you're looking at top 10 MSOs, what is their exit strategy? Are they going vice, non-vice, healthcare, tobacco, alcohol, right? That'll give you insight into type of acquiring they need. I see a lot now, they're stratifying their brand, right? So they're trying to go retail rec, adult use, they're medical, or they're wellness. And a lot of the large companies are doing all 3. So they look for acquisition targets to kind of speak towards those brand lines. And that might be another way that you can start getting insight into what they're looking for.
Excellent. Pernia, these companies all think that they can just turn around and sell their company quickly, but like, how soon should an operator start planning financially to be prepared to be acquired?
I always tell most founders that I talk to, or most owners of the companies, is that whenever you're planning on exiting, you need to start 2 years ahead to really plan out, to have your accounting in order, to have all of your books in order, because the audit for the due diligence, usually it's 2 years. Particularly, as Victor was pointing out, if they're a publicly traded company that is coming to acquire you, the 2-year audit becomes a necessity. It's not just to find out whether a company has been operationally sound for present time. So that's the time that I would recommend that people start looking to getting ready for that and really preparing. One of the areas that a lot of these companies, they don't even pay attention to, is having inventory, physical inventory counts. And even though it's just one of the necessities of the running the business, and I see Victor smiling, it's just one of those things that it's an afterthought because everything is so busy. They're in a hurry to grow the business. However, it's not even just for the company itself to be doing the physical count, but actually having an outside auditor ready at least on an annual basis to come and observe the inventory count, because that's when when they start doing the audits of the books and they run into that problem that they can really see the credibility of the beginning inventory number on the balance sheet.
Good point there. Dave, I'm going to come back to you. What are some of the M&A considerations that make a cannabis transaction different than other sectors?
You're on mute, Dave.
Essentially, I think the one thing that was interesting, and this is backing up pretty much what everybody else said, that I think one of the key things to getting one of these good transactions done is to really assume, don't assume everything's going to turn out perfectly. One of the things before I got into investment banking, I did over 20 transactions with companies like AstraZeneca, Pfizer, and the like, and they weren't M&A deals, they were cross co-development deals, et cetera, but we had about 70% of those deals were successful. And the reason being is we assumed some of the worst case scenarios, and I think that that's proven not to be the case in a lot of cannabis transactions, is that a lot of these deals were done is people assuming stock prices were going to remain high, et cetera. And I think one of the key things that has been helpful for me in business development and investment banking is look through some of the worst case scenarios and then bake those into the structure. And then so when things maybe do go sideways, you're ahead of the curve. And I think that's one of the most important things I could tell anybody, whether it's an MSO LP, because frankly, I think most of the corp dev people in this industry don't have the appropriate skill sets yet. And I think that's one of the key things. Arrogance, there's been too much arrogance and too little humility. So that's it.
Dave, we've kind of touched this on a little bit, but David, I'd like to get your perspective of like, how should a company seeking to sell try to get a sense of how the business will be integrated into the buyer's business?
Yeah, I think Victor did talk about this a bit, and we worked with him on his deal and sat through some of those Zoom calls that were, some parts were good and some parts were a little bit frustrating. But I think the most important thing is you want to examine the culture of your potential buyer, really spend time with the senior executives, but also, again, as Victor said, being in person is everything. When you go to the office, talk to the receptionist, get a sense of how do they like the place. I think that's kind of important. You want to check out the business reputation of these companies. And even though somebody may be a multi-state operator, that doesn't mean that people like working with them or doing business with them. Some are more aggressive than others. Some are more conservative. Some are tough places to work. Some have very good working environments. And you need to distinguish between kind of what I call the romancing phase, when the buyer is working hard to really convince you how wonderful they are, how great they are. They're very responsive to you. Whenever you send an email, they respond right away. And the question is, what happens after? And the key there is to try to have a conversation with some of their other acquisitions and ask the CEOs of other companies they acquired, how did it go? And I think that'll give you a sense. And, the last thing I tell my clients that are selling is, realize you've been building a company and running it yourself as an entrepreneur. Now you're going to be employed by the buyer. Make sure you understand what that means. Make sure you have the flexibility to possibly leave if you're uncomfortable. In Victor's deal, we had no non-compete, thankfully. And when they did leave, they were then free to do anything they wanted without restriction. That's not, frankly, that common. We were lucky to be able to get it for them. So these are the types of things you focus on.
Yeah, and commenting on what you were just saying, David, Victor, I mean, how did you self-assess and prioritize your key negotiating points?
I think the first thing to know is what you don't know. And I think that's a big reason why we brought David and his team in, is that it was an area of expertise that we did not have. And they really acted in a watchdog way to protect your interests, or at least to educate you on the process so that you can make the best decisions. But self-assessing, I mean, One thing is for me, it was a rapid process. So I had to get very good at settling, understanding, digesting, reading through the negotiation. We were very hands-on in the business. We were very hands-on in the actual negotiations and the whole merger, I mean, the acquisition. So it was very visceral for me. But that's why I think you need to have a gut check time if it's really what you want to do. I think the difference there is if you're a day-to-day operator, if it's something you're passionate about, or was this a project for a serial entrepreneur, right? So I think there is gives and takes to that. I think a lot of the cannabis licenses are owned by not the people who run them. And I think that was an advantage, is that we ran the operation and we were owners. So we really did, we really self-assessed in terms of what was valuable. Was it our assets? Was it our brand? Did we have unique IP? And really, and then there's this whole aspect that I find funny in terms of, a lot of targets, and I think it's changing now, but a lot of targets are acquired based on accretive value. Like, what is your actual numbers and revenue? And that's kind of BS. I mean, you're really acquired based on strategic value. But in the negotiations, you're not allowed to bring that up. It's like when you're talking about a valuation or a number, it's, oh, but strategic value, like my footprint is very accretive to where you're going in a Northeast corridor, right? But, oh, no, we don't purchase on that type of value, which is not really true, right? So it's a kind of this little dance where you're showing strategic value, but you also have to show good numbers. And what I mean by, I think the industry is moving away from that, is a lot of the top 10 MSOs have their footprint. So they're not looking for small acquisitions anymore. They're looking for accretive revenue for their stock. And I think it's a major thing. I mean, maybe you may want to reassess who your target is to be acquired by. Maybe more of a mid-tier MSO, or a smaller company that is ready to be acquired by a larger company. That might be a better strategy now, because one of my fears or one of my concerns is that there is MSO appetite waning in terms of acquisition, for smaller targets. I think that's just something to be conscious of through the process.
Bernie, let's continue this discussion about valuations and what are some of the costly mistakes that can be avoided in this area.
One of the main areas that I would say that any business, any organization should look into is investing early on in their accounting infrastructure. Again, having worked in Silicon Valley for many years and seeing the boom coming with the technology companies, it's one of the areas that people pay the least amount of attention to, because they're just too busy growing the business. And therefore, by the time that the exit strategy comes up, they realize that they have to go back and unwind all these years of not paying attention to that area by having a good technology stack, so that you're keeping track of every transaction that is going through, whether it's their accounting or their ERP system platform. And the other costly mistake is paying attention to your taxes early on. And by that, I understand that with the compliance, as Mike, you and I have worked many times on many different clients, it's a hefty deal to be completely compliant at all times, just because of the tremendous amount of taxation that is imposed on the companies in this industry. However, by paying attention and making sure that at least you're keeping up with the filings, and even if you don't have the cash flow to pay it immediately, to at least to have that number in mind and have it on your balance sheet, so that it's not going to be something that comes out during the due diligence process and having to devalue your company. And again, it is not about the numbers, as Victor was saying, particularly right now. Maybe it's not just based on that. However, that's definitely going to have a minus on the price tag on there.
Dave, I'm going to come back to you, and what are some of your recommendations to have a successful M&A transaction? Like, what do you see from your perspective?
That's a great question. I think one of the things that I mentioned before is attitude, And the idea is, like, for example, I think everybody on this phone and on this webinar would agree that there's been too much arrogance and too little humility in the cannabis industry. And so to take it on with the idea that, you know, maybe you don't have all the solutions and come in with a degree of humility. And it gets back to my original point on, you know, don't always assume all these deals are going to go through and they're always going to be successful. The other thing is exhaustive DD. So sorry about this, you guys, but exhaustive DD. So if you can really have strong exhaustive due diligence, which gets to Victor's point too, that's one of the things that's key. I think everybody on here knows a number of deals that happened and they didn't have enough due diligence and exhaustive due diligence. For example, the Harvest deal in Pennsylvania, when they did the deal and it turned out that they were the company they bought had regulatory problems. But I think the one thing that's interesting, and I think Victor will agree with this, is considering the people factor. So if you look back in the 90s when I was in Silicon Valley, Cisco Systems was one of the leading companies in doing roll-ups. They, I think, did 91 transactions in 17 years, something amazing. And if you look, I recently read an interview from John Chambers, the CEO, and he essentially said that if we take over a company, we lose 50% of the workforce in the first 2 years, we consider that a failed transaction. And I think that's one thing that's not really considered enough, especially in cannabis transactions, is taking on really good people and keeping them. So those are the 3 points I want to mention. Thanks, Mike.
Yeah, and kind of, you know, parlay on that last point there, Victor. I mean, how do you maintain founder team dynamics, you know, during the acquisition process?
Yeah. So we had a diverse group of founders. We were part family, part friends. And we were kind of different age groups, right? So we had a little bit of different goals in life. And I think the important thing is to really be on the same page when you go out to the external party, right? And then maybe what it is your negotiation is or your leverage is going to be a little different. And it's going to, if you're trying to get to one point, and it might be a compromise inside of your team. Right. So like this point that we're going to go negotiate out was actually negotiated internally and wasn't quite what we both wanted, but we have to be on the same page when we're going out to communicate. That I don't really think that was much of a problem for us. I think we had a bit of a unique circumstance that we were family and friends. But I think a good thing that I learned, and it touches on Dave's point, is as much as you have a PR, you know, if you were acquired by a public company, the press release is going out, it's required, you can have your own, but once the accounting is turned over, the company is not yours anymore. That press release is theirs, they take care of the story, it's done, right? So one thing I think we wish we did better was internal PR, right? So we did get our management team on board. We were a 60-person company. I made myself available to every single one of my employees, and almost half of them took me up on it. I sat down with them, I explained the process, I explained who was acquiring us, why we made the decision, how a lot of our core values will be maintained. I was honest that that's not guaranteed, that this is a different owner, that there are different goals in mind. And I think the people point is a major oversight on these companies. And I actually think that we're going to see that change in the next couple of years, just in general, but specifically in cannabis. I think it's exacerbated in cannabis from this medical to recreational transition. I think you see a lot of the workforce feels fulfilled in helping patients in a medical aspect. And when you flip the switch to rec and you become just another retail cashier, they don't like that and they leave, right? So that's kind of entry-level staff, and management is similar. But again, that's kind of pairing what your brand was to who's acquiring you. In terms of, I'll just touch on MSO kind of culture. I think they're necessary and they're building the infrastructure of this industry, but they're kind of like throwing down the gravel and they're not paving the roads. So this type of, you know, take caring, and they definitely do take care of their staff and they're better, but they're getting big quickly. And that is what's lost when that happens in that type of increased acceleration, especially early industry, right? So.
Those are really great points, Victor. David, I'm going to come to you. You know, Parnia talked about, some of the things that you need to do from an accounting perspective to make your company look attractive for acquisition. But what are some of the legal ramifications that should be, thought about ahead of time?
Sure, no question. I'll echo what Parnia said about the importance of your financial house being in order, that you have well-prepared books, that they're auditable. We worked with a company, one of the bigger MSOs, that did a very, very large acquisition, and didn't learn until after they closed that the books were not really auditable, and that MSO faced some significant problems as a result. So, it's also important to have kind of a well-organized data site that people can really access all your information and documents and all of that. I think it's also important, and I think Parnia said it right, that you need to think ahead, that, if you're going to sell in 2 years, there's a lot you can do now. And frankly, one of the things we advise people is, well, if you think about making a big sort of capital expenditure that may not benefit the company until 3 or 4 years from now, well, you may not want to do that right now, because if you're selling within 2 years, probably not, even though normally you'd think long-term planning is a good idea. Buyers want to see revenue growth, and they want to see profit, and they want you to maximize that bottom line. And so you kind of have to, I hate to say, sort of milk the operation for a short time if you're planning on selling within the next year or two. And then the last thing we sometimes do is we put in sort of a little different employment arrangements for senior executives if you're contemplating a sale. If you put in a deal that says, upon a change of control, I get this big payment, and you're doing it because you want to encourage and incentivize people to help with the process. But it's also there so that when the buyer comes along and they look at it and say, wait a minute, we don't want to make these big payments, and then you renegotiate it and you figure it out. You also may want to think about, if you're private, giving people either stock options or some kind of what we call phantom equity, where you say to them, depending on what the price is, we're going to treat you as if you own a little piece of the pie. And we want people to benefit from that, because we want people to help us through the process. As Victor was saying, it's very time consuming to run your business while you're also going through this process, especially if you're uncertain whether it'll even happen. And so it's important. I had a client who sold for about 15 million, and his longtime executive assistant walked away with about 200,000, which was a nice payday for her for working for him for a long time. And also, she was tremendously helpful in getting the deal done. So those are the types of things to think about if you're contemplating this in the relatively near term.
Pernia, Dave talked about due diligence, and tell us a little bit more about your perspective of what due diligence really means, in this industry.
Tanza, do you mind pulling up the slide at this point? I had listed the certain areas of the due diligence that becomes absolutely integral for any company going through this process. And one of the things that we talked about is the trend analysis for, how are you performing? As David was mentioning about the fact that, you want to be paying attention to how well the company has been growing at bottom line in that sense. The other area that definitely is an important part is having controls over the cash and inventory, to have internal controls over that, because this is one of the areas that it becomes quite critical, since this industry still cannot just go to any bank and have a banking system. So therefore, the cash part of it, even though it's getting better, it's one of the areas that is still quite relevant to this industry, and therefore you need to have the internal controls over that. The other area that I would like to point upon is the identification of departures from US GAAP. A lot of the times, having a Canadian division for some of our multi-organization is that if they have, let's say, a certain arm in Canada that is on IFRS, if an American company is acquiring you, they would like to see everything on GAAP basis. So it's best for you to have that prepared ahead of time. So when you're looking at the numbers, then you know that it's all, again, auditable and it's traceable to a system that is acceptable in the US. One area that I have not listed on here that also, as I mentioned, that becomes, Mike, you and I have seen it, is making sure that you have exactly identified your tax compliance numbers. This is, again, I can't stress that enough, because over and over again, we do see this, that post merger, they find out that there's been a liability that has not been identified prior to that. And although recently with the merger and acquisition, I've seen that that becomes even a clause within the agreement, that if there's any liabilities that are identified post the merger, this is the effect that it would have, and there is a section for that dedicated. So I'm not going to go through the rest of the list, and this could be available to anyone after our webinar for them to see. But these are the areas that I would say that definitely needs to be looked at.
Thank you, Parnia. And I just want to remind the audience here that in the chat space, if you have any questions, please send your questions in. I'll reserve some time here at the end to try to get to as many questions as we can. Dave, I'm going to come back to you. And you see a lot of these deals, some of them you decide to go forward with, some of them obviously you walk away. What are some of the predictors or signs that you look for in order to make that decision whether to go forward with an acquisition, or maybe this is something that you're not interested in and you walk away?
Well, that's a great question, Mike. I was telling somebody at this conference I was just recently at about, it's really hard to handicap, how a transaction may or may not occur, just because it's cannabis, as everybody knows. Like, for example, this weekend I was reading that old book that many of you may remember, Only the Paranoid Survive, by Andy Grove, the former CEO of Intel. And a lot of the premise of that book is based on points of inflection, big differences and changes in an industry. And I was talking to somebody yesterday, I'm like, how often do those happen? Like once a month in cannabis? So a big part of the success of transactions is trying to predict the future. And as everybody on the call knows, and also getting back to Parnia's point on the pro formas, I think everybody would agree that a lot of the estimations that have been done by MSOs and LPs and other companies in Europe on how quickly a market's going to open up and how quickly their pro formas are going to accelerate, pretty much how many times, 95% of the time, they've been wrong. So, and as we've noted on this call, the pro formas and the revenues are a big part of this transaction. So again, I think it gets back to, trying to realize that this is a different industry. There's going to be probably less options because there's less investors, there's less corporations interested. And obviously then we have all these other issues involving diseconomies of scale because of all the patchwork going across states and 280E and all that. So again, it gets back to the original assertion is just be really careful. Don't assume that you have all the answers. And I think people take that tact on transactions, they will be more successful than not. Hopefully that answers your question, Mike.
Yeah, definitely. And, Victor, I'm so happy to have you on the panel because you've actually went through this entire process. So, tell us a little bit, about, kind of the inside scoop about, what was it like to go through this month, several month period where you had to keep your business running, yet you're going through this process of being acquired. And then the aftermath of what happened after the acquisition took place. So kind of give us a little insight into all of that.
So it was a mad dash from when we won the license in like 2017 to the exit. And I was the operator that never really had the exit in mind. I kept my head down and we just worked very hard. So I think we had just opened our third location the year, probably June of the year we were being acquired. And it was right during the pandemic. So we actually opened, we were launching our third location. It was at the beginning of COVID. And then I think it was about a year into that we really started looking at being acquired. And that came when, for me, the signaling event was we were on like the East Coast of Pennsylvania, and there was a very like-minded business on the West Coast. And we were like, we were very independent. We were very, that was kind of our brand, right? And so it was then that was the same thing. When they sold, I was like, okay, I actually have to consider this now. And it was, people have made comments that me keeping my head down and just saying no, like there was a number that we had, and we would just say no to everything and we would never get distracted. So that was part of the operations, is that in a lot of our competitors, you could see when they were getting courted by somebody, their operations would slow down. And I think by the time we were operating, we had a great management team in place. And for me, it was, we didn't tell our management team right away. And that's kind of what was difficult. And I mean, just giving you like some details that you maybe don't usually see. That was difficult to run the business and have leadership meetings with them while this is going on. And then the other thing that I think was difficult is keeping your decision-making clean, right? So not being emotional. For me, it was very emotional for me, but I knew that I had to make decisions that as a fiduciary responsibility to my partners and my investors. And kind of putting that aside was very enlightening for me to see that I could do that. So that's one thing I would say is kind of self-checking, not only in kind of checking in and are you in a good mental state to make these decisions now? Or do you have enough focus or concentration to be making these best decisions? And that was, you have to restart that every time you talk to someone. And it's the same thing over again with a new dance partner. And you have to do it as vigorously as you did before. One thing that I say that really helps for due diligence is talking to people who are in the process of being acquired or have been acquired. That is probably was the most enlightening thing, because people that they'll tell you the truth in that process. So that was probably best piece of advice is definitely talk to people who are in the process of being acquired or have been acquired by that entity.
Excellent. Dave, I'm going to come back to you, and this is going to be a general question I'm going to ask all of the panelists, but give me your perspective on M&A in this industry and how it's going to play out in the next few years.
Did you mean Dave Trailer?
Dave, yeah. That's
you, Dave.
Dave, you're on mute.
Sorry. And let me just keep it short and let everybody else contribute on this. One thing too I wanted to mention that makes this industry different in M&A is I always, when I was in biotech, would advise our clients to try to understand like BMS and Pfizer and what those companies were looking to do for M&A, and like understand what that is and target that goal strategically to somebody already mentioned 2 years out, right? I think it was Parnia. And so using that using that and understand the external environment enough so then you can target that. Unfortunately, having worked at Cerna, I know that most operators, I think Victor would agree, that you're so busy internally making sure that trains are running on time, and it's such a frenetic industry that it's hard to really have a good external view of where things are going strategically and generally in the industry. But I think there's going to be more cross-border in the future. I think overall at the time, the transactions are going to be more successful over time because people are going to be more smarter and more nuanced. And I think there's going to be some real interesting opportunities overseas, including the US, because I think the EMAC Cureleaf deal a year or so ago kind of woke people up that there is an industry outside the US and the Canadian border. So that's kind of my thoughts.
David, what are your thoughts on this?
Totally agree with the things that Dave was saying. I think consolidation in our industry is going to continue. As we know, the multi-state operators kind of from the beginning had and continue to have a business model that says we need to get as big as we can, as fast as we can, because when federal legalization happens, big alcohol, big tobacco, big pharma are all going to get in, and they're not going to get in by building it themselves. They're going to get in by acquiring the biggest operators. And so profit wasn't important, building revenue was important. Now that's changed a bit and they're trying to enhance their bottom line. So we're going to see more and more acquisitions by MSOs of smaller operators, although that's slowed down at the moment because stocks are so volatile and they're down right now. And so capital raising is slow and they don't want to give away equity so fast. But the other thing we're starting to see is MSOs combining with each other. And that took a while to happen because egos are big and everything else. But that is beginning to happen as well. We saw the Trulieve deal and so on. I agree with Dave that foreign deals are going to increase. We're seeing the Canadian companies look at European deals. I think more and more we're going to see US operators either investing in or acquiring foreign operators. We're looking at deals right now in Greece and Switzerland and the UK and Italy even. That's going to be very exciting, and especially when federal legalization does happen and the global market really begins to explode, that's going to happen as well. But in the meantime, we're dealing with an M&A environment that's very fickle because the stocks of these companies remain highly uncertain, and the capital raising environment, which used to be pretty steady, where these companies could pretty much raise money anytime they want. They can now, but when the stocks are really low, they don't really want to raise money to give away equity, and there's only so much debt these companies can take on. And the truth is, something like 80% of the financings in the last 6 months for public companies have been debt deals. And at some point, their ability to burden their balance sheet is not endless. And so it's going to be interesting to see where that goes next.
Ferdinand, what's your perspective on this?
I would like to echo what Dave and David had been saying. I definitely do see that once we get through this slowdown in the mergers and acquisition domestically, we're going to see it in the Americas in general, and whether it's through Canadian companies or even South American as well. And also the European market, I anticipate is going to take off a lot quicker than the US one once they start opening up. So building a global, in a way, organization is going to be something that we're going to be seeing as we're moving forward.
So Victor, having gone through a transaction, what's your view in the near future for M&A in cannabis?
So I think we're seeing a stratifying of the supply chain, and I think successful strategies are, I echo what Dave is saying, is I don't think you need to target cannabis companies anymore. I think one thing that I'm interested in personally is delivery and local fast delivery. So potentially your exit could be Grubhub, could be Seamless, could be Uber Eats. Uber Eats did make some type of kind of move in Canada, not quite. But there is interest. There is interest in those types of businesses. So I think, we've heard, I've been in the industry for 6 or 7 years now, and you used to hear non-plant touching and go ancillary and don't go for licenses, right? So license acquisition, I still think is okay, especially without federal legalization. And I think cross-border in terms of like certain regions of the country is also very important to look at. To be very specific, I want to looking at Pennsylvania, New Jersey, New York, there was talk about cross-border economics, right? And what I would encourage you to do is go look at the square footage of the amount of cultivation in those states, okay? And I can tell you who's out ahead, even with a 2-year head start. Pennsylvania has some of the top talent in the industry. They have massive facilities, and if they go cross-border, which is completely hypothetical, but I'm just seeing trends and seeing this, is they're 2 to 3 years ahead in terms of supply of New Jersey and New York, right? So trying to ramp up that infrastructure, you still have opportunity. And the reason why I say that is you can go for licenses. Licenses are not becoming merit-based anymore. They're kind of more get your ducks in a row and make sure you have real estate and you get the license. So now that's also not limited license state. You don't have immediate value by getting that license. So that's a big change in the industry. So I think you need to be a little bit more creative. You need to make sure that obviously you don't want to be in a distressed state selling, but I think you can look beyond, just retail. I think retail. And I also think retail is probably more attractive, or potentially like a distributor or someone like that is more attractive. Something that we're seeing in New York, potentially, since it's decriminalized, you don't need to be a retail shop. You could potentially be a wholesaler that sells to a restaurant. So like a bread supplier, you can be selling infused product to already established businesses. So these are things that are coming online. So another thing is like CPG, like consumer-based products, right? Like those are things that are coming online that are new, that can be very, can be very unique, can be brand centric, that gives you some, it gives you a different angle in the industry.
Hey, one thing, Mike, I wanted to add that, we've been doing work, we call it now THC plus and THC minus. We've done deals in hemp and marijuana, and we've been working globally for 6 years. And I was just at CanMed this week. One thing I think we believe is this industry is quickly going towards just molecules. Delta 8's a classic example. People, and what I call marijuana, I'm a biochemist. So to me, cannabis is the over-encompassing, the genus. So I call it marijuana and hemp, but I'm going to start calling it THC plus and THC minus. But I think this whole industry is going to start bifurcating. It's almost going to be like the pre-Cambrian explosion, where you're just going to have all kinds of different companies doing different things. I saw a talk last night where they're diffractionating full plant extract to find these different cannabinoids that are doing some really interesting things in cancer. So the future is going to be crazy for sure. I think everybody on the call would agree with that.
And I would add to that, we shouldn't count out the hemp industry at all. There is, a shakeout that's definitely occurring, and in some ways it's kind of giving us an eye towards what may happen when cannabis plus, whatever you want to call it, is federally legalized. There was this massive, granting of licenses. A large supply of hemp was created, too much to handle the demand that wasn't growing enough for CBD and related products. As a result, prices plummeted, and most hemp producers are struggling, and a number of them are going out. And actually, New York gave a kind of handout to them by allowing them to start growing adult use early, which is a whole other conversation. But I think in 3 to 5 years, when this shakeout is over, the players that are left, the strong ones that don't go out, are going to see a dramatic increase in interest and revenue and growth. And before hemp was made illegal 100 years ago, it was used on many, many products. It's sustainable and has so many benefits in terms of clothing and just endless potential uses beyond just CBD. And plus there's CBN, CBG, there's all the other cannabinoids that haven't even been explored. So I think we should not count out that the hemp industry is going to get very exciting to me in the next 3 to 5 years.
David, I've got a question for you. There are still some states out there that require you to be an in-state resident in order to obtain a license. Do you think those statutes are going to stand constitutional muster, and do you think that they will be struck down here in the next few years while we're waiting for federal legalization?
Well, in this industry, we do a lot of this. We don't know. I think it's going to depend on the state in terms of how the legal challenges will result. I think in most states where they started doing it, they realized the challenges in trying to enforce it, and with companies, struggling to raise money and get proper M&A deals done or go public, they started. In most states, they've gotten rid of it. Colorado was the first to do that. Other states, I think, will follow. And because what happens is they prop up somebody who isn't really running the company, and who does that really benefit in the end? So, whether they will sustain legal challenges, if it's an in-state business that's meant to stay in state, I can see a basis. Again, it's not, when you say constitutional, it's not the federal constitution they're looking at, it's the individual state constitutions and whether you can pass muster there. So every state is going to be different in these challenges.
And I've got one final question for the entire panel, and I get this question every day, is, what are your predictions about federal legalization and what's going on in Washington, where, we have the safe banking bill passing, 6 times in the U.S. House, but never making it through the Senate. It just seems like there's a lot of talk, a lot of discussion, things happen all the way through the House side of things, but then when it gets to the Senate, Senator Schumer and the other senators at the U.S. Capitol seem to kind of put a quash on everything. So, Victor, let me start with you. What are your thoughts and perspective on that?
In general, it's not why anymore, it's how, and it seems just to be becoming part of a political agenda, which I think is very unfortunate, particularly with the social justice initiatives that is happening in the industry. Without safe banking, without access to potentially small business loans, without traditional help to start a business, you're creating opportunity without actually making it viable. So I know, and this is what frustrates me a lot, is that's the platform they stand on. Is Schumer and Booker is about social justice, is about getting everybody out of jail. And Schumer tweeted the other day about Biden signing clemency for cannabis prisoners. It's not enough. And you're also, I mean, to take it even more further, it's dangerous. Cannabis is becoming more recognizable. Before, we were still kind of off the map. Zoning wise, licensing wise, you're supposed to be in an industrial park, not on a main thoroughfare. Now you can be, now you're visible, and people understand you're a cash business. So if you don't have a good banking relationship, you're going to have a couple $100,000 in your facility. So I think someone was killed, literally killed in California as soon as I think this month. So cannabis retail locations are actually starting to become targets. So I feel very strongly that this is actually becoming a safety issue, and it's becoming an opportunity issue. You have an entire industry that is pushing for social justice without the actual support for these operators to be able to do it. So I think it's FUBAR.
I mean, I usually give two answers to your question, Mike. First, don't listen to me. Is the first thing I say, because I've been in this industry almost 10 years, and that whole time I've been telling people it's 5 years or less away. So clearly I have no clue. But the second thing I tell them is, it is, you know, as Victor said, it is no longer whether, but when this will happen. I think it's inevitable. I think it's likely to happen. Safe banking is closer now, according to reports this week. We need Booker to back down his objection because he doesn't want safe banking because it'll interfere with full legalization, which I personally disagree with. I think the challenge is going to be, as Victor said, how do you take the Schumer bill, which actually is not well put together. It's got very high taxes. It's got a lot of issues in it. It's got an alphabet soup of federal agencies that they want to be involved in, you know, regulating this industry from a federal level, which is just going to skyrocket the cost of compliance and everything else. And we're hoping it could be a little bit more hands-off approach and lower taxes and so on, if and when they do it. You know, and the last thing I say to companies is, be careful what you wish for, because, you know, if you think state regulatory hassles are a burden, wait till you have the federal government on your back for everything you're doing. It's going to be exciting, but also very challenging.
Dave, I'm going to come to you next because, yeah, I mean, would federal legalization actually complicate things and you know, stifle M&A activity?
Well, I think the one thing, my take on this is both my parents were politicians. So I know how they work, and my parents were pretty good at what they did. But I think people on this call will agree that this industry is very complex. It goes across more federal agencies than any other industry that I know of, right? The DEA, the FDA, the USDA, you know, IRS, right? So my point is, due to that complexity and the fact that everybody we're talking about Schumer's bill, the politicians are going to screw it up. So, I mean, case in point, the 218 Farm Bill. So I think they're going to screw it up. The last other point I want to make, two other points, is don't base your strategy on government regulation. I've been in this industry, over 8 years, and I have no idea. And we don't tell our clients it's going to happen this year or next year. Frankly, we don't care. Let's just keep keeping on. But the last thing is that 2018 hemp bill, even if they do pass regulation, then you got to have people get the memo. So our client was a company that was shipping hemp from Kentucky to Colorado,
And that's the truck that ran the red light in Oklahoma, and they pulled it over, and the Okies from Muskogee were like, oh my God, the biggest drug bust ever, right? And it turned out it was hemp. And so they didn't get the memo for the 2018 Farm Bill. So there's a lot of problems. Even it's not going to be black and white. That's our take.
We're at the top of the hour, but Parnia, real quick, if you could give your comment as well.
Absolutely. I echo everyone else's view on this, and I will go like this, like David did. This is unknown. However, I would say with people like Charles Koch and Jeff Bezos lobbying for it to become legal, hopefully they can push it through the government at some point, because it's definitely time. It's time.
Thank you, Parnia, and that's going to conclude our program today. I want to thank the panelists today for your insight and input today, and thank you, the audience, for logging in and paying attention to this conference.
Thank you, Mike.
Thank you,
Appreciate
Mike.
it.
Thank you.
Have a nice day.